Bitcoin's secure because it has this massive, diversified, decentralized network of Bitcoin security data centers, which we call miners, but they're really driving up massive hash rate to secure the network. They are subsidized by a Bitcoin block reward, and they're also subsidized by transaction fees. The block rewards, for the most part, run out after the first 30 years of the network. Between 2009 and, and 2035, we will have mined 99% of the Bitcoin by 2035. So that's running down, but the transaction fees will grow and are growing over that period because there's a scarce amount of block space. You can maybe process 30,000 transactions an hour. And if you want to move your money or you want to do that transaction, that's a limit. You have to put a bid to get your transaction in the next block. People are going to bid high. If I want to move $1 billion, I'll bid a lot of money. If I need the transaction to take place, I'll bid it up. The more people in the network, the more demand for that transaction bandwidth. What would you pay to sell $10 million worth of real estate in New York City today? What? You might pay $1 million. You might pay $1 million in transaction fees. The transaction fee economy works just fine for real estate, right? There's no block reward for real estate. People don't just get a bunch of free real estate every 10 minutes for being in the real estate business. They all work on the basis of a commission. The same is true in the financial markets. So there'll be commissions and fees to trade. There's a very limited amount of transaction space. The fee will go from a few dollars a transaction to $30 a transaction to $300 a transaction to $3,000 to $30,000 to $300,000. And that being the case, there's no reason to think the mining ever stops. It will be more efficient. In a world right now, I guess you have $1 trillion asset class and the Bitcoin miners get paid $10 billion a year. So the cost for the security, right? $10 billion a year is like 1%, right? The fees will trend to be less than that. And so that 1% security cost will probably become 0.5%, 1/3%, 1/4%, 0.1%. But there's no reason why the revenues can't go up while the value that's protected goes up. And the incentive is always going to be to run the equipment. Even if the transaction fees aren't high, once you've invested $100 million in Bitcoin mining equipment, it's a sunk cost. You can't repurpose it to anything else. If your electricity is free, and if you have $100 million of equipment, then it doesn't matter whether you make $1 million a year, $10 million a year, or $100 million a year. You would run it for $1 million a year. You would run it at a 99% lower price because $1 million a year is still better than nothing a year. The electricity is worth nothing to you. 1/3 of all the electricity in the world is valueless. It's wasted, stranded. We've got too much. It's like you have a dam. Nobody wants to buy electricity from the dam. The water just flows over the dam, right? Or you can mine Bitcoin. So the genius of the network is everybody that gets into Bitcoin mining does a one-way trade. You take $1 billion, you invest it in Bitcoin mining, you can't get your money out. You can go bankrupt. The equity holder can go bankrupt, then the creditor gets the Bitcoin mining. The debt holder can go bankrupt, then the electricity company, the power company gets the mine. The power company can go bankrupt. The nation state, the sovereign that owns the power company will own it. If you notice, electricity companies never go bankrupt. Maybe they're owned by the state or they're owned by the country, but people decide they want electricity and they'll keep running them. There's no way to turn them off. And that's why even in a crypto winter or bear market, the hash rate just keeps going up. It's a one-way silicon ratchet. And it's like at an 8 to 10 year natural frequency. It's like 8 years after the business became awful, my equipment starts burning out. But you see, even if the equipment burns out, Like people they would buy Bitcoin mining rigs for $10,000 at the height of the bull market, and then the market price crashed, and then they're buying the same rig for $1,500. So the price of the equipment will compress by 90%. The price of electricity will go to zero. How does it go to zero? Everybody that's just mining on expensive electricity goes out of business. So when they go out of business, where does their equipment go? It migrates to the next buyer. Who's the buyer of last resort? Someone that has free power. There are actually places where where the power is negative cost, where people will pay you to take the electricity. That happens on solar and wind grids, where the sun is shining, the wind is blowing, and we're going to burn out the grid unless you take the power.
Wow.
Right? You see?
Yeah.
And it happens if I'm flaring methane gas or if I'm flaring natural gas. The regulator says to you, if you don't actually use this, if you don't cap the flare and use this, then you have to write off and close in the well. And then you take $100 million write-off. There's always going to be people that are going to want to mine Bitcoin, and there will always be a market for Bitcoin equipment that's used. And you want to be a doomsdayer? Well, okay, 10 years later, all the Bitcoin mining rigs all burn out. What happens? Well, what happens is the big semiconductor manufacturers like Bitmain already have the engineering specs. They will sell this equipment at a variable margin of 3%, right? What does it cost for a 386 chip? Or what does it cost for a 30-year-old computer, right? At some point, you manufacture it for 5% of the original cost. It gets insanely cheap. Like they put computer chips in greeting cards now, right? Mm-hmm. And so you're working your way down this manufacturing curve and this Moore's law. It's just like, the truth is guns are cheap. They're too cheap, right? You could buy a gun for $100, right? That works. What you have here is a network defended by technology, and the technology is a one-way function, and the hardware is one-way investment. You can't unknow how to set off an explosive. You can't unknow how to build an ASIC. But now that you know how to manufacture it, and now that you own it, what can you do with it? There's only one thing you can do with it. The only thing you can do with it is provide security for Bitcoin. So it's a quite elegant engineering design that I entice so many engineers to invest so much money to simply defend my economic rights against those who would steal from me.
But you know what? While we're on the topic, you have to ask yourself, what's the future going to hold for businesses? Because if you ask 9 different experts, you're going to get 10 different answers. Bull market, bear market, rates will fall, rates are going to rise a little bit. It'll be really helpful to have a crystal ball.
But until that happens, over 40,000 businesses have already future-proofed their business with NetSuite by Oracle, the #1 cloud ERP bringing accounting, financial management, inventory, and HR into one fluid platform. So basically, with just one unified business management suite, you have just one source of truth giving you all of the visibility and control you need to make quick decisions. And with real-time insights and forecasting, you're peering into the future with actionable data.
When you're closing the books in days and not weeks, you're spending less time looking backwards and more time on what's next. So whether you're earning millions or hundreds of millions, NetSuite helps you respond to immediate challenges and seize your biggest opportunities. And speaking of opportunity, right now you could download the CFO's Guide to Machine Learning and AI at netsuite.com/iced. Again, that's netsuite.com/iced with the link down below in the description. netsuite.com/iced. Thank you so much, NetSuite, for sponsoring this episode. And now let's get back to the podcast.